The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts, let's have a quick look at what traders are watching out there. Ukraine and the US signing a deal which will give the US preferential access to new Ukrainian minerals deals. US Trade Representative Jamison Greer saying the Trump administration expects to conclude initial tariff deals with some US trading partners within weeks, but no official talks with China are underway. Microsoft forecasting stronger than expected quarterly growth for its cloud computing business Azure after blowout results in the latest quarter. We also heard from Meta Platforms writing strong advertising performance to beat analyst revenue estimates for the first quarter and match expectations for the next quarter. Let's get across the technicals now, though. Jonathan Tacadena from MPC Markets joining me on the first day of May. Jonathan, sell in May and go away?
Oh, well, it could be. So what I thought we'd do today is actually just break down the stats of what happens in May. So traditionally, May is actually a weak month, and what we'll see in the charts, in the stats coming up. I actually didn't have charts today. It's just a bunch of stats. So there you go. So that's the average monthly gain of the All Ords, and this is a 40-year sample as well. So it's 85 to 23.
Yeah.
So quite like, and you just see there, on the average monthly gain for throughout the year is about just under 1%. May is slightly positive, but it's always down, and that's over a 40-year sample. Now, what you'll see on the next chart though is that if you actually break that down into, say, from 85 to 2000, and then from 2000 onwards, May has actually been a negative month in general. So what actually happens there is that you can see that May and June are traditionally weak, and that's what's been happening the last 25 years. So that whole sell in May actually continues on to June, and then we tend to see a bounce in August.
What's happening in September there? Is that reporting season effect, or that seems worse?
Well, look, it's just seasonality. Obviously September, October, that's usually the crash periods there, especially in the US, and obviously we follow the US as well. So that's usually what happens there. But generally, if you just go by the stats, it does look like sell in May and go away does actually work.
All right. Well, I saw your morning report saying rule number 1, buy stocks that are going up. Rule number 2, follow that. So what stocks would you be looking at if people are selling in May and going away?
Okay. So at the moment, we're playing it pretty cautious. So what's happened is we've had a very volatile April. I think at the lowest point, I think it was down nearly 11%, the XJO. It actually finished up close to 4% at the end of the month. So it just shows you, that's a quite large move. And what we've been fortunate is that we called it quite well, caught the bounce, and now we're actually just starting to line up on a few things. One thing I have noticed, some of the minerals are starting to move. So, I do my scans.
Yeah.
A lot of the rare earths, Linus being the leader, Arafura, they're starting to continue. And some of the lithium names as well. And also, and the uranium investors out there that have been beaten down, they've actually got a reprieve here. So I think that momentum could keep going in those sort of sectors there. But just in general, we're playing it cautious. Anything that's, we're really having a deep dive in the portfolio and thinking, does this have to be here? If the trade wars do continue, and I do have some stats coming up there, we could see some trouble coming up in the next few weeks.
Before we get to those stats, I just wanted to ask you broadly about whether you're then looking more at cash. I think Mark Mobius saying yesterday to Bloomberg he would be pretty much majority cash at the moment.
It's a good place to be.
Yeah.
Look, I think the majority of investors out there have had a really, really good few years. So if you've caught the wave, if you've caught gold, sidelines make sense. The RBA might cut in May, and so if you can lock in some term deposits at these levels, it makes a lot of sense. I'm starting to get a lot more people getting calls cautious about the stock market, and they're looking at things like private credit, fixed interest, structured investments to just sort of solidify that income. And there is that narrative out there at the moment.
All right, let's get into some of the stats though. And I guess we're looking here at the overall trade impact, the tariff impact. So shipping volumes dropping significantly.
Yeah, exactly. So this is, I wrote an article for Ausbiz on Tuesday. Don't know if anyone's caught it, but
we read it, Jonathan, of course we did.
Great. So the main thing you have to, the main point I want to come across is that this is the thing with working within finance is that we kind of, or I kind of forget how I'm always looking for things that affect the stock market, and things happen in the stock markets a lot faster than it actually happens in real life. And it reminds me of what happened during COVID. I was actually telling my family and friends a lot, maybe at least a month early before people started finding in Woolworths for toilet paper, to actually just start stocking up on things. And I was just like, I'm just worried about a few things here, like just stock up on a few essentials. And then when it actually hit, they were like, why didn't you tell me? Because no one actually pays any attention.
Well, I was in Asia, no one was following what was happening to us. We had the toilet paper shortage in January. Everyone was laughing at me. You get it in March. It's the follow-on effect, right?
Exactly. So this is so one of the traders that I follow, she just mentioned that, look, I was walking through CVS, which is kind of like their equivalent of Chemist Warehouse. And she said, I believe she lives on the East Coast, I think Chicago, around that area. And she just walked through and said, I saw empty shelves at my CVS, and I haven't seen that since COVID times. And I was just like, oh, hang on. Well, I think I might have seen something like on that on Twitter. And this is the chart that I saw. So basically, shipping container volumes have all dropped. And what I've actually done is I've looked a little bit deeper, and there's a few shipping container channels on YouTube, and they're talking about actual volumes dropping 30, 40, 50% in Los Angeles. So what you have to remember, and I'm not a supply chain expert, but that it takes 30 days for a ship to go from Shanghai all the way to the port of LA. And half of their shipping goes through that one port. Now, so what's happened is that in Q1, because people were worried about the Trump tariffs, they've actually front-loaded their inventory. And so you won't actually see shortages till probably about mid-May to late May. And so what I'm saying is that this is something to watch out for. If you start seeing CNBC start broadcasting this to the mainstream, and you see actual footage of people fighting for toilet paper or essentials in the US, that will set off a panic within the stock market, and that's what I think we could see another leg lower. So I'm not calling it right now. At the moment, Microsoft, Meta had a good beat. We've got Amazon coming out tomorrow, and what I've found over the years is that generally the markets do well during earnings season. So after that earnings season's come out, it finishes up, and we start seeing more economic data. We saw a lower GDP print in the US last night. So there are signs there that we could see some trouble coming up in the next few weeks. So just be cautious out there. The markets are, where XJO's, I think 81.30 thereabouts. I think 8200 was our initial target for this bounce higher. So we're starting to lighten up here, and just getting a little bit cautious.
Are you stocking up on toilet paper and canned goods?
The great thing is that we don't have the tariffs with US, so we can actually just watch this with stocked up fridges, and we'll be okay.
All right, good. Jonathan, thank you. Jonathan Tacadena from MPC Markets. That does it for this edition of The Trade. Be sure to join us again next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.